Hi, good day, everyone. Welcome to Metrics Trading Professionals. I am Mini FS. Today we are treating the basic course, 3 types of orders. Always remember that we are students always. Okay, what is another? Another is an instruction you give to the broker, to the dealer to buy or sell an asset for you. Yeah, we're talking about the financial assets like we're talking about Forex, stock, crypto, or whatever which you are trading on the online platform. So when you pick an order, you're either buying or you are selling, and you are telling the broker, you are sending an instruction to your dealer, to your broker, to buy at certain price or sell at certain price. Okay, through this course, we will be talking about different types of orders in the online platform. Firstly, we have what we call the market execution. We have what we call the market execution. I want to see, I used to have okay, I think I can see it. See, let me get it out. Let me show my PC. Just a moment. Okay, yeah. Let me share the screen. So firstly, we have the market execution, and then we have the pending order. So what are the 2 types of orders we have? The market execution and the pending order. Those are the 2 types of order we have. Now, the market execution could either be market execution or instant execution. So it's either a market execution or instant execution. Yeah, I know I skipped in our last course. I didn't talk about the MetaTrader 4 or 5. Now, the MetaTrader 4 or 5 is a platform that is owned by MetaPost Incorporated, and this platform is being customized by each broker. So every broker acts as intermediary between the buyer and seller. As intermediary between the buyer and seller. So the broker is kind of the middleman in this case, but the forex broker is definitely different from the stock broker. So you have to understand that part. We have different types of brokers. I'm not going into that. So each broker has the MetaPost Incorporated, has the MetaTrader 4 or 5. Okay, some brokers will have the both of them, some will have just one of them. Okay, so on the MetaTrader 4 or 5, it could be instant execution or market execution. And what it implies is that you are taking your trade at the current time. You want to execute, you want your order to be executed immediately at a set time. That's the so currently, let's assume you meet Euro USD at 1.23456. You want to buy at that price. You meet it at 1.02895. You want to sell at that price. That is instant execution. So you are taking a trade at the current price. That instant execution or market execution. Then we have the pending order, as the name implies. You want to take your trade at a price different from the current market price. You want your order to be executed at a price different from the current market price. Okay, I want to write on the whiteboard here. So we said that the instant execution, if you meet the market at this price, 1.23456, and you place an order on that same price, it's instant execution or market execution. But if you meet the price, if you come to the market, whenever you open your MetaTrader 4 or 5, you will definitely meet the market at a price. So if you want to take your trade at a price that is different from the price you meet the market, then it's called pending order. So I can decide to place my trade at 1.4, for instance. I can decide to place my trade at 1.42300. It's pending order. I can as well decide to place my trade at 1.00911. It's also pending order. So right here is the current market price. And then up here, if I take my trade here, it's going to be a pending order. And then if I still take it below here, with consideration with the current market price, as well going to be called a pending order. Why? Because the market has not gotten to it. So it's going to wait till it will be executed when price now finally moves up and gets to it. If the market now moves from this price and goes up and gets here, then my order will be executed. If the market now comes down and get to this place, then my order will be executed. But if price does not get to it, my order will not be executed. Okay, so what is instant execution or market execution? Is the buying or selling of a financial instrument at the current price. While pending orders is the buy or sell of financial instrument at a price different from the current market price. So we have different types of pending orders. We have the buy stop, we have the sell stop, we have the buy limit, we have the sell limit, we have the buy stop limit, we have the sell stop limit. But we're going to be talking about buy stop. We'll be treating buy stop, buy limit, sell stop, and then sell limit. These are the three orders we will treat because of this record. So when you are using a buy stop, now I'll take note of this, please. Anytime you buy, you are anticipating that the market will go up. You want the market to appreciate. That's when you make profit. Okay, so anytime you buy, it means you are holding that thing in your hand. If it appreciates, then you make profit. Imagine something you buy at 1 million naira and you can't even sell it at 1 million naira. It means it's depreciating in your hand. Then imagine that thing you bought at 1 million naira and now you can sell it at 10 million naira. It means it's appreciating. So you're going to prefer this second scenario than the first scenario. Buy at 1 million and have the ability to sell at 10 million than buy at 1 million and can only sell at 500,000. Okay, so whenever we buy, we are expecting appreciation, and anytime we sell, we are expecting depreciation. So imagine you sold something at 10 million and today it's valued at 1 million. You'll be happy that you sold out when it was high. But if you had sold out at 10 million and now it's valued at 50 million, you would often want to regret why you sold that thing when you sold it. Okay, so that's it. When we buy, we want appreciation, and when we sell, we want depreciation in the market. Having said that, when we are using the buy stop order, anything buy, we want the market to go up. Anything buy, we want the market to go up. I've established that. This is a buy market. Anything buy, we want the market to go up. And then anything sell, we want the market to come down. Now, the only challenge here is that with regard, it becomes a buy stop order or a buy limit order because when we compare where you place the order with regard to the current market price. So the type of order is determined by comparison of the place the order is placed, the point the order is placed, and the current market price. Okay, the point the order is placed and the current market price. This is what determines the type of order. So two things are there. Where do I place the order with regards to the current market price? So if in this case, it's a buy stop, if I come and I meet the current market price at 2, and I place my order to buy at 4, it means that this is the current market price, and then this is where I place my pending order to buy. We'll practicalize this in the next few minutes from now. So what I'm expecting is that this market will come up, trigger it, and go. That's buy stop. Okay, then it's buy limit. Remember, I want it to go. Buy limit. So anything buy, that word buy means I want it to go. Okay, so buy limit, if current price is 2, still 2, but I go and place it at 1. I can place my order at 1 to buy. So while it's 2 above here, I am buying at 4. It's 2 here, I'm buying at 1. So I place it below the current market price to buy. And what am I expecting? I want the price to depreciate first before it appreciates. So in both cases, I want the market to go up. But in the first case, I place my order above the current market price. And in the second case, I place my order below the current market price. So it's a sell stop if I meet the market at a price, at a price 6, and I place my order to sell at 5. So what am I expecting? I'm expecting the market is at 6, and then I place my order at 5 to sell. So what I want is this. The market will go down. It picks it and it keeps going down. Then it's a sell limit. It's a sell limit because the current market price is 6. Current market price is 6. Oh, what's that? Current market price is 6, but I place my order at 7 to sell. Each time I sell, I'm expecting the market to depreciate, to go down. Do you understand? Each time I sell, I'm expecting the market price to go down. So I place my order at 7 to sell. So what I want is that it goes up first, triggers my order, then comes down. So sell limit and buy limit has similarity, as you know, some similarity. Buy limit, I want it to come down before it goes up. Sell limit, I want it to go up before it comes down. And then buy stop and sell stop has some similarity. I just want buy stop, let it just keep going up. Sell stop, let it just keep coming down. Okay, so this point is my pending order. Pending order, PO. 7 is my pending order, PO. And then 1 here is my pending order, PO. And 4 here is my pending order. Okay, so having said that, let me quickly practice it on the chart. Let me share a chart and then let's practice it. Okay, just give me a moment. Let me share this chart. Just hold on, just hold on. Trying to load chart. Okay, while I get that, let me explain take profit and stop loss. Let me explain take profit and stop loss while I get my chart ready. Okay, back to the whiteboard. So already I've explained the types of order. Let me explain take profit, stop loss, and all that. Sorry for the little delay. Okay, so there's something we call take profit, and stop loss. Take profit, stop loss. Yeah. So of course, there's still something we call entry price. Okay, so these types of orders we treated now: instant execution, instant execution, and then under dependent order we treated buy stop, buy limits, sell stop, sell limits. Okay, they are all types of entry prices. They are all entry prices. So when we talk about types of order, we have types of orders can be, oh, I'm trying to just, I hope you get it. So types of orders, let me just write it here. Orders are divided actually into two types: the entry orders equals entry orders and exit orders. So the entry order was the first picture I showed us. The entry order was the first picture I showed us, which is categorized into two: the instant execution and pending order. Okay, I hope that has been noted. Okay, so that's this over here. Entry prices are divided into two: instant execution and pending order. So order itself is exit and entry. So take profit is an exit order, stop loss is an exit order. So take profit will close your trade with profit. Is an order given to the broker to close your trade with a determined profit. Stop loss is an order given to the broker to close your trade with a determined loss. Of course, we don't win all the trades. We win some, we lose some. The only thing we try to do is to manage our risks in such a way that our wins, would be more than our losses. Okay, so having said that, take profit is also known as TP. Stop loss is also known as SL. Okay, SL, stop loss, TP for take profit. So having said that, let me just quickly, there's nothing to, okay, let me explain this. Whenever we are buying, remember I said whenever we buy, whether you are using the buy stop, whether you are using the sell stop, or using instant execution, anytime you buy, you want the market to go up. So because you want the market to go up, if this is your entry price, so let me write it EP. So entry price is EP. Because you are buying, TP will be up, and then SL will be below your entry price because you are buying. And whenever you sell, your expectation is below. So take profit is always where your expectation is. So when you are selling, take profit will be below. This is your EP, and then SL will be above. So SL will be up here, stop loss. So take note, just have this in your mind. So this is just the direction. So when we go to the chart now, we would explain it. So let me share the charts and let's quickly explain it. Okay. All right, so this is how this analysis is. So very crazy thing. I thought when it bounces on this support one to just retest on support one and drop, but bounced on support two rather, just moved up. Anyway, still maintaining this channel. Okay, let's go. Let's look at. Oh, this one held playing nicely, Okay, wow, playing this. I'm not even open this. Okay, let me not be distracted. So quickly, let's take a buy. Let me get a clean chart so we don't even get distracted. Yeah, clean chart. So, because here I loaded it, I pointed at it, right click and click chart window. So this is it. I remove the grids. So I click and I click on grid. It's out. So, oh, I have another here. Yeah, I don't have another. Take card, GPY. Okay. Okay, so this card JPY. So I'll quickly explain all the types of orders here. Okay, so firstly, let me do the buy. Let me do for buy. Let me do for buy. So buy stop, like we said, is so you click on new order. You can see you click on new order. I believe you can get this dialog box. Let me share this one also. Okay. So you click on new order. This is new order, and then you select your volume, your lot size. So let's assume it's 0.01. Then you come here. Do you see types of order? It's both of them, market execution and pending order. So I want to use market execution. I'll just click buy, sell. So let me just buy now on the current price. Done. Do you see down here? Is executed, buy. Okay. Let me sell also. New order, instant execution. This is what we call market execution. You see market execution. Some other broker will call it instant execution. I click on sell. Sell. Okay. So I'm buying, I'm selling. So this is urgent. So right now I want to do a pending order. So I click on new order. Let me do a pending order. Current price. I say when we buy above the current price, that's buy stop. So 94.42 is the current price. So I'll drop that and I select pending order. You see, we have buy limit, buy, sell limit, and all that. But I want to do buy stop. So I select buy stop and I come here. Let me buy at 95.00. Okay. So I click on place. Now, stop loss and take profit, I will not put it here. I'll put it when I do the buy limit. I can put it here. So now, since I'm buying at 95, let me put it now. TP has to be above where I bought. So TP can be at 96 and stop loss will be at 94. I'm buying at 95. TP is above my entry point and stop loss is below my entry point. So I click on place. Okay, so when it plays, we are going to see it. The same way I did this buy stop, it's placed already. Have you seen it? Look here, you will see, do you see buy stop here, buy stop, take profit, and then stop loss. Okay, so I want the market to move up. Currently, the market is below where I bought. The market is at 94.43. So I want it to move up to get to 95 before I'll get triggered into the market, before I'll get executed, before my order will get executed for a buy. So I haven't done that for buy stop. Let's do for buy limit. So I want to place a buy limit here. What's the price? The price is 92.017. So let me just place that 92. So I want to do a buy limit. I'm still buying. I want the market to go up. So I select pending order and then I select buy limit. So 92. So that's 92. I can place my TP here at 93. I'll play my TP at 93. Now, do you see? I just put 93 for stop loss. I can't place it. It's not active. Why? Because it's wrong. Stop loss, since I'm buying, stop loss has to be below my current price. So I place 90, is active. Now let me put 90 for TP. I can't place the order because it's wrong. So 93 is active. I'm buying my EP for a buy is 92. So my take profit is 93 and my stop loss is 91. So I place it. You see it, buy limit, TP above, stop loss below. Buy limit, TP above the entry point price, stop loss below the entry price. So what am I expecting for this buy limit? I want the market to come down, trigger it, then go up and hit my take profit. If it comes down and goes down first, it will hit my stop loss. and I will close the trade with a loss. Okay, this is, you have to practice it for clearer understanding. Let me load another chart. So let me use this one, very interesting. Of course, I've done buy and sell instant execution. Let's look here before I do that. Look here, you see the pending orders. These are two boxes. You see the two pending orders we placed on card JPY, buy stop and buy limit. Now I did buy and sell on card JPY. You can see it here. The buy and sell is here. Okay. It's running because they are already current trades. So depending on that comes below here. Let me still do buy and sell here. Current price, I buy, I sell. Current price, I buy. You see them there, executed already. You see it, Euro GBP, buy, Euro GBP sell. That's it. So let's have a pending order. Let's have a pending order. So the first pending order I'll place will be a sell. Let me place a sell limit here. 0.84503. That's where I want to place the pending order. So I go to pending order, sell limit. So I have to select sell limit. I'm a bit fast, so you have to go through the record again to master it. So 0.8453. 0.8453 is active. I can place the pending order. I did this sell limit at a price below like 0. Okay, let me put 2 here to be active. I can't use a sell limit and use a price that is below the current price. So sell limit is used to sell above the current price. Sell stop is used to sell below the current price. Have this, play it often and often, recite it, and before you know it will be part of you. Try not to cram it. Don't just cram it, okay? Just try to know it. So because I'm selling, my stop loss will be above. My take profit will be down. I said initially that take profit has to be in line with your expectation. So I'm selling here. I place here to sell. Let me put my take profit at 93 point at 0.839. 839. Oh, you see error. I place it on stop loss. That's wrong. So 839 is TP. So I have to put it here 839 TP. So let me remove this stop loss. You see it's active. I can place the trade now. So stop loss has to be above. So let me put my stop loss at 847. Stop loss 847. 847. It's active. Everything is intact. I can place it. I've just placed it. Do you see? This is my TP. Okay. So my TP is here. Let me zoom in. So we'll see. Oh. Okay, can you see? Sell limit, stop loss above it, take profit below it. This is just simply how it works. So let's do a sell stop. Let's do a sell stop here. Let's do a sell stop here. 8349, sell stop. Sell stop is used to sell below the current price. So we'll go to pending order. Sell stop is used to sell below the current price. 834. Hope that was right too. So I have to put my stop loss on. Stop loss will be above 837. It's active. Then I'll take profit 831. 831. 831. Let's place it. Okay, this is it. So let me put my TP here. Just modify this a quick way of modifying. So sell stop is here, stop loss is above it, and take profit is above it. Watch this over and over again, and you are going to understand it. It's as simple as that. So you can see in our toolbox, the pending orders, the 4 pending orders we did are there. Buy stop, buy limit on one pair, sell stop, sell limit, sell stop on the other pair. So once the market comes to these prices, it will get executed. Okay, so thank you very much for watching this record. If you got value, try to subscribe to this channel, and then follow us on our social media pages as well. Check out our website on mtradingpro.com and get back to us on your questions or whatever you want to reach out for. We're always there. Thank you. Have a great day.